Hey everyone. So, you've definitely seen the headlines, right? India is on a mission to become a $5 trillion economy. It's this huge, ambitious number that's supposed to signal our arrival on the world stage. But you have to wonder how much of that is a solid, predictable fact and how much is just hype. All right, let's get into it. This is the big question we're going to tackle in this explainer. That $5 trillion dream, the one that's been talked about for 2026, is it something we can actually count on? Or is the real story a bit more complicated than what you've been hearing? And here it is, the whole story in one slide. The big claim. The headline number has been $5 trillion by 2026. But if you look at the more recent, sober projections from folks like the IMF, the number is actually looking more like 4.4 trillion. So what's going on? Where did that $600 billion gap come from? To really get our heads around that gap, we've got to look past the slogans and dig into the actual numbers. Because as it turns out, it's not as simple as just stacking up growth percentages year after year. You know, here's the crazy part. The main reason for missing that big target isn't really about a lack of economic growth. Nope. It's about something a little sneakier, but just as powerful. The exchange rate. We're talking about the value of the Indian rupee versus the US dollar. So let me show you how this plays out. Let's say India's economy is worth 350 lakh crore rupees. Now, back when that $5 trillion goal was set, everyone was kind of assuming an exchange rate of around 75 rupees to the dollar. At that rate, yeah, we're looking at about $4.66 trillion, pretty close. But with the rupee weaker now, closer to 85, that exact same domestic economy is suddenly worth only 4.11 trillion in dollar terms. It's the same amount of stuff being produced, just valued differently when you convert it. And because of that currency effect, the whole timeline gets a bit of a shuffle. The IMF is now saying we'll probably cross the 4 trillion mark sometime in 2025-26. That big 5 trillion milestone, that's likely pushed back to 2027 or maybe even 2028. You know, to actually hit the original 2026 target, we'd need to sustain an almost unbelievable 10 to 11% growth every single year. That's a huge ask, especially when the whole world economy is slowing down. But okay, here's the twist in the story. Missing that $5 trillion tag by a year or two, that's not what really matters. The real story, the one that should get you excited, is about the powerful economic engines that are really firing up just beneath the surface. Let's talk about that. And this chart just says it all, doesn't it? While you've got these major economies like the UK and Germany practically at a standstill, India is projected to just blast forward at 7.5%. We are, and it's not even close, the fastest growing large economy in the world. This is the underlying power we're talking about. This line right here really gets to the heart of it. That $5 trillion tag might be a little delayed, sure, but the fundamental economic power, the actual muscle, it's not just real, it's actually picking up speed. It's about what's happening on the ground. So what are these engines? Well, for one, private companies are finally spending money again. For the first time in about a decade, they're the ones building new factories, not just the government building highways. Second, there's this massive premium boom. Luxury cars, high-end real estate, it's all selling like crazy. And third, we're moving up in the world. It's not just about call centers anymore. We're talking about global giants setting up their core tech and R&D hubs right here in India. And what's fueling all this? Well, there's a huge shift in global money happening. Big international investors are looking around for growth. They see China slowing down, and they're pulling their money out. And where is it going? A lot of it is coming to India, which they see as the only other big market that can deliver those high returns. People are calling it the Great Reversal, and it's pouring fuel on our markets. And you can see that confidence in hard numbers. I mean, look at this. Bank of America is putting out a target for India's Nifty stock index to hit 29,000 by the end of 2026. That is a massive vote of confidence from the world of global finance. Okay, but let's be real. No honest analysis just looks at the good stuff. It's not all a clear path forward. There are some pretty significant storm clouds or headwinds on the horizon that we absolutely have to talk about. So we have to ask the question, right? Is it all good news? Because while that top-line growth number looks amazing, there are some real stresses bubbling up under the surface that could definitely throw a wrench in the works. You can basically boil down the risks into three big categories. The number one concern for a lot of economists is this idea of jobless growth. Then you have the ongoing issue of rural distress. And finally, you have the wild card, a major geopolitical shock coming from outside India. Let's break that down real quick. Jobless growth means the economy is getting richer because of things like automation and AI, not because it's creating tons of new jobs for people. In fact, we're actually seeing hiring in the IT sector slow down. Out in rural India, you've got unpredictable weather and rising food prices really squeezing families. And geopolitics? Look, if some conflict somewhere sends oil prices spiking to $100 a barrel, our import bill would go through the roof and could stop this whole growth story dead in its tracks. So, we've looked at the good, we've looked at the bad, we've seen the big numbers and the big risks, but what does any of this actually mean for you, whether you're trying to figure out where to invest your money or you're a student planning out your career path? Well, for investors, the message is pretty clear. The growth story is real, but the focus is shifting. The big opportunities over the next few years are probably going to be in the sectors that are tied to the real economy. Think infrastructure, banking, and manufacturing, especially some of the public sector companies. The easy money days of just betting on generic IT services might be winding down. And for students, this is a huge signal. The economy of 2026 is not going to be looking for just another generic degree. It's going to demand deep, specialized skills. We're talking about areas like high-end finance, advanced manufacturing operations, and maybe most importantly, people who know how to manage and implement AI systems. The game is changing, and specialization is absolutely going to be the key. So to wrap this all up, no, India probably won't be a $5 trillion economy on paper in 2026, but it absolutely will be the most powerful, most important growth engine on the entire planet. And I think that's the real takeaway here. The superpower tag? It might be a little delayed, but based on all the fundamental strengths we're seeing, it is definitely not denied. Thanks for tuning in.